just to build a normal house on a normal lot. And they said, perfect, your permit number 4,600 in line. We'll review it in 8 months. 8 months?
That's a crime.
Some of these houses quite frequently are going $1 million above list price.
They're not buying a $1.4 million house in Southside San Jose because everybody's millionaires over at SpaceX. That's why the $3 million, and up market, I think, continues to be very strong, while some of these other segments are struggling.
You need to be like a respectfully stupid price to turn heads. I sold it for 1.3. There'd never been a house sold for more.
All right, guys. Well, welcome back. Let's jump in and get after it. I'm gonna start with stats. Like we talked about, so last week, 2 weeks ago, June really is kind of the peak, right, of inventory. And I think after we get through the 4th of July, things will, drop down from there. But we're still sitting at over 2,000 active single-family homes, condos and townhomes, and only about 800 or so pending. So we've got about 2.5 months to 3 months worth of inventory. So we're kind of seeing that balance, right, between buyers and sellers. And at least on my end, on the listing side, I'm seeing that reflected in lower number of offers, not seeing a lot of things going crazy over asking price. The stuff that you guys have gotten into contract recently, what are you seeing?
Definitely priced more transparently. I don't think sellers are looking at the multiple offer $300,000 over asking anymore. Mm-hmm. I think it's priced to sell because, like you said, they're focusing on getting the one buyer, two buyers to come in to understand the value that they're putting on their home as well, and not really allowing the market to kind of
push it up.
Yeah, exactly.
Yeah, I agree.
Yeah, and this is more townhouse related. Just put a townhouse in contract listed at 125, and like going in, we're like, it's only been on the market 2 weeks, but like going in, we're like, hey, we're starting low. They're probably going to do this, that, this. We'll land here, and went like 50 grand under. They came back, 40 grand up. We came down, and then just landed somewhere in the middle. So, but it was very relaxed.
I put one on the market in Campbell last week, and I did price it a little on the low side to try to generate traffic, but kind of interesting. Not a ton of traffic, right? Ben and I was talking about this. June can be a challenging month to list.
There's just so many options, especially like that Camel one, because that was right around the corner from the one I had on Castro. And going into the price strategy on Castro, the feedback that we got were that the rooms were small, which obviously translates to people are just becoming more picky on what they're seeing and what they're willing to spend the money on. And her question was, if we take it off the market now and relist it at another time, do we increase the number that we got now? While we don't have a crystal ball, so we can't tell that. But if the room sizes aren't changing and that's the main core of the feedback, then we have an understanding that this is what buyers are putting the value around or close to. So we ended up with 2 offers, and it was almost exactly at asking, which, thankfully we started a tad bit higher to kind of equate for that. But yeah, it's a more targeted audience.
Yeah, I think if we would have listed it in February to March, we would have probably ended up maybe 100K higher, 75 to 100K higher than what we're going to end up getting today.
We would have also had 1,200 homes less than what we have
now. For sure, right?
There's 3 things that I think are super interesting, and they're all pretty different. Right now, Morgan Hill, Gilroy, Hollister have so many new developments that if you bought a property, whether it's a townhouse, single-family house, within the last 3 years and you're ready to go to a different chapter, those new construction homes are really, really competing against you, and the builders are giving pretty crazy incentives, whether it's 4% interest rates or taking $100,000 off to just keep things moving.
Yeah, didn't you have a buyer that wrote on one of your listings that backed out and then went to a new home?
Yeah, so that's in play. We have one in Hollister that we're going against new construction, right? So just because you're buying new construction doesn't mean that it's going to jump up right after you buy it. Sometimes there's this awkward lull, right? And you got to filter out and let everyone get into their new homes, right? So new home construction, I'd say, is a little bit of a premium, but there's some very good deals there right now. Then the complete flip side to that is the Atherton, Palo Alto, Los Altos Hills market, which I'm sure you guys see when we're looking at the MLS. Some of these houses quite frequently are going $1 million above list price.
Yep.
And that, is kind of insane, for numbers that we probably never even thought of, just a couple years back. And then right in the middle of that is the entry level market for, let's call it San Jose, where 2 years ago, you guys saw me sell John Quill Drive for 1742, no questions asked, 9 offers. I have the exact same house, same lot size, same size, probably a little bit nicer. And I'm struggling to, get out of that project. So,
the houses that you're seeing, and
quite vast.
The houses that are the Palo Alto, Los Altos, those high-end ones, $1 million over asking. Do you see that the premium comes from, again, taking school district out of it? Do you see the premium coming from the neighborhood that it's in, just proximity to work compared to like a Los Gatos Hills or something?
When you say Los Gatos Hills, do you mean like Summit?
We can say, you can go off Shannon. I feel like it's a pretty decent drive for people who want to be within that 5-minute radius to downtown.
But even Los Gatos, the high-end market is going off. Mm-hmm. Yeah. If it's a better, it has a view or has an it factor, like look what you guys did, right? You moved that house super quick, $6 million, multiple offers, right? So I think, of course, if you're in the schools and you're close to work, they're getting these prices, but people are okay with it because we'll kind of correlate that to jumping them to the next thing that I was going to say, is that you look at some of these companies that have been respectfully irrelevant for a long time. Remember SanDisk, a little company called SanDisk? They made like MP3 players and little things, competed with Apple for a while. That's up like 3,000%, right? So there's a lot of overnight millionaires. Today we have we're waiting on an earnings call for Micron, right? Like Micron, the company based out of Boise, Idaho, right, is controlling the AI market. And there's so many people that are so stock heavy with these, base salaries that are becoming overnight millionaires that wanted to live in Los Altos. They're selling their house in Sunnyvale. Yeah. And now 6 million versus 7 million. Who cares? They just want it. They're going to tear it down. So if they buy for 8 million, put another 8 million into it, it's worth 24 million, right? So I'm also seeing a huge land grab right now to put these big monstrosities on properties in Atherton, in places like that. So
it was funny. Some of my clients, like on the entry level side, right? I met with some sellers over in South San Jose. And they're like, well, now that SpaceX and, Anthropic and all these guys are going public, there's going to be all this money. And I said, there's going to be a lot of money in the Valley, but they're not buying a $1.4 million house in Southside San Jose. Sorry. That's still the entry level. It's not going to double in price because everybody's millionaires over at SpaceX, right? And so to your point, it's like that's why the 3 million, and up market, I think, continues to be very strong while some of these other segments are struggling.
Well, it's almost backfiring in the sense that you need entry level positions and they're feeling like they're training their replacement and they're going to be the first ones to be cut. And we in Silicon Valley are in such a bubble that, $250,000 a year is somewhat entry level-ish for, someone who knows how to code in software, right? So it's sad because I do feel the people that are getting out of college, getting good jobs here, don't feel that reward maybe that they once felt. Yeah. So.
Yeah. Kind of switching segments here. It's an interesting time politically in the United States. And, it seems like so often Democrats and Republicans are at odds with one another and not a lot happens. But we actually had some potential good news. A bipartisan bill passed, the 21st Century Road to Housing Act. And they're saying it's the biggest change to the housing history, housing market in history. It includes things like increasing supply, cutting red tape for faster construction, expanding financing options, and the list went on and on and on. Trump was supposed to sign that today. He did not. So that gets put on hold, I guess, until the Save America Act that he once passed, which is basically voter reform. So kind of unfortunate that, you use one bill as leverage over the other because, ultimately, everybody in America suffers if we can't have cheaper access to housing, cutting the red tape for builders and developers. And so, stay tuned and we'll see what happens on that.
Well, as you guys know, I had every intent to build a house. And I could tell you, it took just to build a normal house on a normal lot. I wasn't trying to push laws, boundaries, nothing. Went to go submit the plans and they said, perfect, your permit number 4,600 in line. We'll review it in 8 months. 8 months?
Yeah.
That's crazy.
That's a crime.
Well, and isn't that though like also
It is.
right? But isn't that also like a byproduct of what we were just talking about when there's so much money in the valley and people are now land grabbing and building these mega homes or tearing down a house in Sunnyvale and putting one up double the size? I mean, it's all that log jam because there is so much money in our market, and then ultimately these public resources are understaffed.
Yeah, and I think if whoever's listening to this, if you are voting and you're into that sort of like political sense of like finding housing, when we say housing, we're not just talking about affordable housing. Like there's a whole nother side of people who are trying to build their own house, right? Mm-hmm. And sure, of course, like I'm very fortunate to be able to be in that position, but what people need to understand is that I'm taking a house that was the worst house on the street, building it, and it's going to be worth $3.5-4 million. And what happens when that happens? Well, you get property tax, right? So it increases the revenue. So I think these cities should be really pushing to get these projects done. And if you need to hire more people, but then we don't have the budget. So it's back asswards.
Yeah, and speaking of property taxes and all the fees and stuff, there's actually a bill in California that's trying to get passed. It's AB 736 Gonzalez, and basically what they want to do is allow cities and counties to increase how much they can charge for transfer taxes when somebody buys or sells a home, right? So we know in Santa Clara County, any house, condo, townhome, whatever that trades hands, there is a county transfer tax that the seller pays, which is what the seller customarily pays. San Jose and Mountain View have a city transfer tax on top of that buyer and seller usually split. We know that homes over $2 million in San Jose, there's the additional tax on top of that.
2.3, I think now, right?
Is it bumped up to 2?
Finally.
Yeah.
Because that's why people would see like 1.999.
Yeah, but so 2 to 2.3 million, but that's just kind of the median price for homes in our market, right? And so this, so actually this email about AB 736 came down to us through our local real estate board. And I think it's worth mentioning that a lot of times consumers probably think that realtors just sell homes, right? We're just, we're out there signing the yard, picking up clients. But we do a ton of advocating for fair housing, for keeping taxes like this in check. And so we got this email today to reach out to our local Congress members and let them know that we don't feel another tax makes sense for homeowners or the industry as a whole. And so believe it or not, your realtors are actually doing stuff behind the scenes.
Amen.
In fact, NAR used to be the largest. What do they call it? The
lobbyist.
Yeah, the largest lobbyist. Them and the NRA in the United States, and so they do a lot of good for the community as a whole. And one of these things is to help strike down a bill like this.
National Association of Realtors, not to be confused with the National Rifle Association.
NRA.
Yeah.
When you said that, I was like, oh my God, that's kind of crazy.
And I know you had a couple things to bring up, Jay.
Yeah, so as everyone knows, FIFA's going on right now. I know, Ben, you're a big fan. I think you're participating in some of the festivities. Is it tonight?
Tomorrow
night.
Actually, he might be on the field. I mean, you could be scoring the next goal.
Some people are getting confused with players out there.
So right this way. So for any investor out there, so Airbnb is projecting a 400,000 guest surge for all the host cities. Jeez. We are obviously a host city. In kind of reaction to that, they're offering a $750 cash incentive for anyone that's not currently on the platform to put their home on the platform to meet with demand. Not the biggest dangle, but hey, extra $750 just for throwing your house on the platform. Mm-hmm. Kind of cool. Yeah, so
I had some clients recently move out of that small little condo community on Sean Circle over there. Mm-hmm. Purchased a home in South San Jose, and they stuck this little 2-bedroom condo on the market for the FIFA games. It's making a good amount of money for this, and it's consistent.
We should do that with our staged and vacant homes that we can't sell right now. Yeah. I should put VP Place, put Carlton Estates, and just have them all rent all 5 out for FIFA.
I would make an absolute killing.
Yeah. Well, yeah, there's $6,000 right off the top just for doing it, or a little under.
Yeah.
Good stuff.
Yeah, and then another one, just like, you see headlines that are kind of doom and gloom, like to debunk them sometimes. So CNBC had one that's mortgage rates are falling, mortgage rates are falling, but demand is still weak. We kind of talk about this as more seasonality. So they're saying last week mortgage applications were down 4% from the week before.
Okay.
Average rate is still like that 6.6. We're seeing some stuff a little lower than that around here. But Dave just went over the stats, so we just kind of attribute that to the seasonality right now. June, July, a lot of buyers are out of town. Kids are out of school. They're on vacation. So we kind of see this every year. So you see those headlines.
Don't believe the hype.
Don't believe the hype.
I like that.
Essentially.
And I know Ben had something interesting. I thought you were talking about insurance premiums. But
No, absolutely not. Absolutely.
No, that's why I wasn't clear before we started.
Talk to your insurance provider for all insurance questions. But it's funny. I mean, kind of piggybacking that on the amount of buyers who are in the market. I think sellers right now are taking that into consideration, and I have a couple who are now wanting to wait till after summer come to list their property, and their question is, what do we do now to get our property market ready? What can we spend money on to get the highest value? And the conversation that I keep going back and forth with them is what buyers are willing to pay for compared to what homeowners basically waste their money on and trying to do to increase the profit.
Right.
We go back and forth a lot of the times. We always tell our sellers, and we've had this conversation, the distractional items. Certain items that buyers will come in and see that we can remove just to make it look updated and modern.
Paint, flooring.
Deneutralize cabinets, knobs, handles. If you had an opportunity to maximize profit right now, what would you? Would you start ripping up kitchens and countertops, or what?
I give you my 3. I would go paint. I would I'm going on the market, right? I would clear section 1. That's been a very big thing with buyers, especially entry level, like termite work. They want move-in ready. And then for a third, do I have a budget?
120 grand.
Oh, 100.
No, 50.
Yeah.
No, okay, I'll do it even. I'll do 20. Okay. So then the third, I would swap countertops on the kitchen.
Swap countertops.
Because, when I say paint, I'm painting cabinets, vanities, clearing section 1, so all termite work, and then I do new countertops in the
Like quartz or something.
Yeah, so we can do countertops in kitchens.
What about
depending on the
bathrooms?
sides? Yeah, sure.
Well, we can replace a vanity pretty inexpensively.
But yeah, so I would say that if you have a tight budget, that's good.
Yeah.
I'm doing one down the street. It's like a 2,000 square foot house. We're doing paint, everything you just said, countertops, and a little other odds and ends for 20.
Yeah.
Thoughts on roof? If it's an all wood roof that's deteriorating.
That's gotten you before, though.
But the problem is,
I would include a quote.
yeah, you don't get the value out of it. You don't get to sell your house $30,000 more.
Same with solar panels.
Yeah.
See, last home that I sold over in a recent neighborhood, wooden roof. We had a lot of people come in hesitant because they weren't able to get insurance on it.
Yeah, but people also don't know how much a roof costs. So I find that buyers, if something is $15,000, when they're budgeting to write the offer, are saying $50,000.
Yeah.
That's why you include the quote.
Same with including a quote for a pool to fill it.
Yeah.
What would you do, David?
You mean fill it or quote?
No, I'm saying if you had 20 grand.
Oh, yeah, paint, probably floors, and then I'm updating the kitchen if I can. Although the one in Campbell that we have, we ended up adding recessed lighting. We did the whole house for about $2,600. Made a big difference. Right?
26,000.
No, just for the recessed lighting.
Okay.
Yeah, the whole.
I was like,
I thought you meant paint and
No.
Who's your guy?
We work for free.com.
Yeah, no, I think we spent like 35 on that house.
What would you say the
ready.
return was?
I think we'll get at least 75 to 90K more.
So
every dollar you spend, make $3 back.
Yeah, no, for sure. In fact, the one I got coming up in South San Jose, as is right now, I said we'd stick it on the market for like $950 to $999. Probably get somewhere between $1 million to $1.05 million. We're gonna spend 40 grand, and we'll probably get 1-2 for it.
Sick.
You know what I heard a buyer say? Actually, a couple buyers now say to me that we have been doing. They're like, I hate that real estate agents always recommend their sellers to paint over bricks on the fireplace and the exterior because once you do it, I can't undo it.
Yeah.
I mean, I understand what they're saying because they have an emotional connection to it, but at the same time,
No, the
No,
buyers.
the buyers are
Oh,
saying.
buyers.
Like young buyers are like,
Yeah, 'cause
I
it's
like
taking
the
away the
brick.
option.
Yeah.
Yeah.
And they're like, I like the brick. And I'm like, oh, really? So I was kind of thinking about doing whitewash on brick now.
interesting.
But it just, the red doesn't photograph super well.
I feel like it all depends on how the red is. Some of these red fireplaces are in just horrific condition.
Yeah, of course.
Like, not like it would deter buyers quicker than the young buyer would come
Yeah.
in and be attracted.
Well, we've tore them off and sealed it up before, just
Yeah.
to make the room
Yeah.
and give you more options.
Which actually is, I think, another good thing to do if your living space is a bit limited and everything is centered around a fireplace, but you're not going to use a fireplace and you don't know where to put a TV or a couch. Just seal up the fireplace, keep the chimney on the backside, and if
Yeah.
you want it back, you can always do it again. But
Same conversation I had with the seller over there in Campbell. When the way she remodeled the kitchen, it was unsymmetrical with the fireplace.
Yeah.
Like you couldn't work around it at that point. So it was like, if you get rid of it, at least now you could center a TV and a living space to make it look functional compared to how do we operate, like you said, around it.
actually, I changed my mind.
No.
Maybe instead of Section 1 termite work, I would seriously consider a skylight. I think natural light right now, I would say if you had 100 people, 92 of them would put natural light in a top 5 thing that they're looking for in a house.
What's a skylight cost?
Between $2,500 and $5,000 based on what I've seen, as I am not a general contractor. I
Yeah,
am just a
or
real
the sun
estate
tunnels are a cheaper
sun tunnel's cool.
alternative as well. We see those in hallways and sometimes bathrooms and stuff.
They throw me off because I think I didn't turn a light off.
Yeah.
But to all the buyers watching, I think you're going to start to see more transparent prices. Right now, we have an influx of inventory, a lot of craziness going on in the world and the economy.
Yeah.
But I don't think it's all doom and gloom. I think there's a lot of great things happening too. And
Hopefully gas prices.
it almost
come
feels like, granted, I was in 3rd grade in 2001, but it almost feels like what I hear about 2001 with like the .com era. There's like so many new businesses and opportunities that learn about it, you know?
Yeah.
So we asked this question to, I guess I can both of you guys. We asked this question with Jeet and Dave last podcast about the transparent pricing and just how the mentality has changed to where it's okay to go 2 weeks on the market. Don't put an offer deadline immediately if you don't, need to, if you're not getting that interest. The confidence built in with the seller expectation in the beginning of being, again, confident with the strategy, understanding we're looking for one buyer to hit our price point. Are you seeing that change a little bit, or how are you kind of navigating that situation?
It's kind of property specific, but I think in general, if you are right around 2 million or under, unless you have a pocket where there's no competition, I think you should probably write it out for at least 2 weekends before setting a deadline. So what I'm doing now is I'm saying, hey, you know what? Offer deadline is going to be 2 weeks from now. However, seller is now open to a strong preemptive offer, right? We used to not do preemptives a lot. But now if somebody's willing to come in early and hit that target that the seller wants, just take it off the board, because it's not like we're going to get 12 offers in
Right.
by waiting 2 weeks, we might get 2, 3, 4.
Do you see this with everything? I mean, Trump did sign an agreement, so I see it kind of settling down a little bit. But do you see this
Peace agreement?
Yeah. Do you see this strategy kind of riding out though until the new year?
What strategy?
Like the more transparent pricing,
Oh.
or is this a summer?
Here's
is this
the
our
thing,
summer
dude.
fling?
At the end of the day, you have to be really, really aligned with the seller, right? If they need a certain number, let's call it $1 million. They literally, if they don't get it, they cannot get the new place, and you go on at $1 million and you're not getting your number. What do? Right? Versus if you went on at 698 and then you have 16 offers because you turned a bunch of heads and people are like, what's going on? You get them in, and then maybe they don't get to the number. It at least gives you as the agent and you as the seller clarity to be like, okay, I do not think that you can underprice a house. However, I do believe you can not, if you want $1 million and you go on it at 948, right? 50,000 under. I don't think that's enough to give you the leverage you need. Right. You need to be like a respectfully stupid price to turn heads and be like, get them in there and then see what happens.
What about it? Let's just use the same number, $1 million, and you price it at $1,075,000 for 1-1, knowing, okay, let's stay on the market for 2 weeks. And
Don't hate it. I don't hate it, but I don't love it.
But here's the problem, though. When buyers set up their searches on these portals, or we set up searches for our clients, the buyer's like, hey, I'm good up to $1 million. So now you've eliminated all of those buyers that have that search criteria up to $1 million. And now you're not going to hit them until you're 2 weeks or a month on the market when you drop the price. Now when the buyer sees them, be like, oh, it's been on the market for a month. They dropped the price. So instead of offering them $1 million, let's offer them $950. Right? Because I had a client just do that the other day. Well, what if, he goes, what if we just listed high and, just wait for that one offer? I'm like, well, if we don't get it, then we go back to what you're saying, then we don't know what the market's telling us. So then we got to drop it. But now if we drop it, it's been on the market a month or a month and a half, and now people are looking for a deal, right? Versus we get them excited as soon as it hits the market, turn heads, get a couple of offers, leverage them as high as we can, and now we know what the market's willing to bear. Otherwise, we lose all of that potential buyer pool if we start too high.
But look what I just did on Summer Creek. He interviewed, 7 agents, and everyone was like, gotta go low, gotta go low. And I'm like, yeah, go low to a point, but we still want the right buyer. I had, 7, 8, 9 offers, something like that, and I sold it for 1.3. There'd never been a house sold for more. Is it me? I don't know. But they came in at 1.15, I want to say. Right? So that gave me enough leverage to push and get,
It's 1.3
to where we needed to go. But I think you just need to double down on your strategy with your sellers so that everyone is in alignment. But I also break it down into percentages, right? At $6 million, 20% versus $1 million, 20%. That's what is that? 800 grand, right? So if you're
20%,
yeah,
of $1 million,
yeah. But I'm saying
versus $6 million.
yeah, if you're reducing prices like $6 million versus
Right.
5.8 versus 1 million to 800, like it affects those buyers so much differently.
Yeah, and also, we're kind of getting a little in the weeds here, but the strategy about starting a little bit higher, I think that's more predominant in the higher end market, right? 5 million to 50 million.
Thank you. That's kind of what I meant to say.
Yeah, so 5 million to 50, they're always starting high because there are people that may just want to pay that just to get it to lock that house up. But I think the majority of our deals, which sit under 3 million, I hesitate to list high. If you look at any statistical data on overpricing the listing, they typically take longer to sell, and then they end up selling for less than what you could have if you hit the market either at transparent or slightly below.
Yeah, I would rather be under and counter everyone to where we need to go.
Yeah.
But at least I'm getting
You have leverage.
them through the door, emotionally attached,
Yeah.
and if they want to tell me F you, they tell me that. But at least I got them in. At least I got the offer.
And-
Any offer is a good offer.
Yeah, and because of all the showings that you get and the activity, you're going to get more feedback, right? Versus if you list it too high, one person a week looks at it, you don't have a lot of data or information to present to the seller.
Cool.
Amen.
Cool. All right. That's it. That's a wrap.
Movie night tonight.
Movie night tonight.
If you're watching this, you missed a good one. You missed a good one.
But I'm sure we got a bunch of. Don't we have like music in the park coming up?
Oh, Ben.
Man.
Ben, have you started working on
Yeah,
it?
come on,
Yes.
dude.
Yeah. We have a couple things in the works. Yes.
All right.
But yeah, middle of July, Music in the Park starts. It's our 7-week summer extravaganza.
So every Sunday you will see Ben at Music in the Park.
Every Sunday.
Start working out.
Yeah. All right, guys.
Thank you.
Next time.